Good morning, traders. Welcome to the TMT Daily Strategy video for Monday, March 5th. Traders, we did get a little bit of a bounce. We were carving out that low early on in the morning. We tried to sell off a couple times, really held in there, and then we got the short squeeze that we were probably thinking that was going to happen into the close on Friday. So the shorts covered, put up a nice little candle. But what I wanted to bring out to you more importantly is, where is this market going to be headed, right? Are we headed to new highs now? Oh, wow, everything looks great. Well, I would suspect that we get another corrective rally off of this low on Friday, which is meaningful. And again, we'll show you the ES charts and the spider charts and everything. But I want to show you what's underneath the hood, the internals of the market, right? Is everything humming what it's supposed to be like? And sometimes price skews that. It gives you a false sense of, wow, the market's really strong. And then you look at our internals and you say, wow, this is not strong at all. I think we might even fail here. So that's what I'm going to show you for this morning's trade. And really start understanding, saying, okay, well, maybe we should start putting shorts out again. And I believe that's what's going to be the case. Now, we want to see where price takes us, right, and what level on the charts that where we stop and get a sell trigger. But we also want to make sure that we're not going to be shorting into strength, right? We're not going to be shorting the market, and the market continues to go higher, right? And that's going to give us, price will give us that evidence what we're looking for, right? It's technical analysis, right? It's not voodoo, it's not magic. It's everything has to be aligned and readjusted during the course of the trading day and or days to come. So let's get right to it. The first thing is the bullish percent SPX, right? It's based on a point and figure chart on the S&P 500. How many stocks in the S&P are bullish? Well, it's not really that great. It's about 50, let's call it 56, 57. It's not that great at all. So that's not a good sign as well when we have priced out that actually started to rally. Now, yet remember, it's one day. But even if we get a couple of days of a rally, and I suspect that I would suspect that we gap up today, and then we'll see where the market goes going into Tuesday and or even Wednesday for that matter. Okay, but we could just gap up and then crap out, and then we start our descent lower. I don't think that's the case yet. I think that would be too easy for everyone, for the bulls and the bears. So we have a 55 right up in this area. Not really a good sign, but I want to just show you additional information here. Here's our NIMO, right? McClellan oscillator, very reliable, and we're at a neutral state in the market, right? You're at -3, so they're really not telling us, we're not overbought, not oversold in this indicator, but neutral, right? But I would suspect that if we're going to start to rally, that you'll see the internals start to pick up a little bit faster, and we would be somewhere around 30, 40, 50. And that's really why I wanted to show you this chart here, okay? That's the McClellan oscillator. Now, really important chart is really money flow. This is the S&P, this is the spiders, and we're going to cover the spiders as well in our segment, in our chart segment. But you can see this is the spiders daily chart. We have a lot of distribution, right? You can see that here. This is not good, as we have a rising increase of distribution while the market is headed lower. Now, we did move higher, okay, here on Friday, but we are breaking down from our 50-day moving average, which has held this trend for a long time. Now, we just tapped underneath it, just kind of put our ugly heads underneath that line. So we need to see a little bit more separation from there, but again, not a good sign as well. Here is the chalk and money flow. Okay, I don't see money flowing into this at all. Now, we could get a rally or two for the day, and then we can have money flow come in a little bit, but still not going to be as high as it was here, as you can see. All right, so this is not a good sign as well. There's the money flow index, and here's the force behind the move, right? Negative. So not a good sign here. This is not a good chart to show you that, hey, we're going to be going higher and we're going to be challenging the highs. Now, mind you, there is a gap area, and usually gaps need to be filled. Can that happen? Of course it could. I mean, there's no two ways about it. We can get a very light corrective rally and take out this local swing high here. I'll get into that again in the charts and the spiders and the ES, but I want to show you that our indicators and our model here is showing that we have a very weak internal, and there's not a lot of money flow that are flowing into the markets at the moment. Now, there are selective stocks that are doing fantastic that really have no impact of what had happened for the last 3 days. I'll be honest with you. There's a lot of good stocks out there on the long side as well. But if the market does start to be fearful of what's going on with the tariff and possible war, I think all bets are off on the long side for any stock. I'm not sure. I really don't care how much strength there is, because what happens is that you sell good stocks to pay for the bad stocks, and that's basically the retail crowd. What they do is they get a margin call, so they sell stock to keep the stock that's not working for them, when they should be getting rid of the stock that doesn't work for them and keep the longs that are working or the shorts that are working. And that's what happens. So you'll get a mass liquidation across the board if anything really fearful were to happen again, like we did back in early March. Now let's take a look at the VXX. You can see here, this looks like a nice formation, like an M-top formation, which is bearish for the VXX, right? For now, anyway. So you can see that here. We have beautiful spot right at the 39.37. That's going to be a really big and key and pivotal. We need to make that right side. All right, but I think that's going to be that neckline, 39.37. Keep an eye on that. If we break that low, I think we head lower yet again. But we got a nice, clear, well-defined M-top formation forming. Right? It has not triggered because it needs to take out the neckline here at 39.37. That's very, very important. Okay, keep an eye on that. Highs are going to be, if we take out the highs here, you'll see on our volume profiles that we have a thin zone all the way up to $71. And yes, it could happen in a matter of days if it gets ugly again. Right? Now, I'm not saying it is. I'm just saying that there's a lot of uncertainty out there. That's why gold has been bid up, and it's not really going lower. And I love to see gold go lower. But again, we'll see. This week's going to be very important. Here's a weekly chart of our ES. I like to show that once a week. These are the bigger picture targets of what could happen. I'm not saying it's going to go down there. What I'm saying is we have a very thin zone here. If in fact we take out this area here, okay, which is going to come in at the 21.36, that's a big area. If we lose that area, we should see a major flush in the market. Now, again, guys, I am not saying that could happen, but we need to know what could possibly happen. Also, we have an outside week reversal. That's very bearish. Outside week reversal from the previous week. Very, very bearish. That's not a good sign. However, we are still intact in our uptrend channel. Okay, we have not broken that, so there's no technical damage on the weekly chart, right? So things are starting to move. Things are starting to happen. We just need confirmation from different things that we're looking at, so to speak. So the uptrend channel is still intact, yet we do have an outside week bearish reversal. That is not a good sign. Okay, so let's see what happens this week. Now, how do you confirm that? Well, you confirm that by taking out the low from last week. So last week's low is going to be very, very important. Okay, so last week's low, that'll come in somewhere right around the 26.47, which, as you know, we've been talking about 26.50. So 26.50 is going to be key and pivotal support. If we do not move higher and we start to break on a closing basis 26.50, that'll give you a confirmation sell signal in the market. All right. Next is going to be the ES. Now we'll take a look at the daily ES. See, there's a couple of things here that are going on. We have a swing high here. We have a local swing high here at 27.85. We have our 26.50. That's really important here, and you can see that our volume profiles, that's really hanging in at the bottom here. Now, if we lose that, we'll have a major flush right back down to the 2600, and then again we'd reevaluate it. And then there's that local. That 200-day moving average that comes in at 25.81. So that's also going to be very important, which coincides pretty much nicely with the lows from February. Okay, 26.50 key and pivotal. Then you got the high here at the 26.87. All right, now we have a nice little hammer here. Now, can we test the swing high here at the 26.85? We can. Remember, there's a gap area here. Eventually going to be filled. Can we go all the way to that gap and then fail again? Yes, I think that any hard run in the markets should be shorted. That's now. In 3 or 4 days, when the market made its run, we're going to reevaluate. We're going to see and monitor what the rally is going to be. Is it corrective? Is it light? Is there no volume behind it? Very sluggish? Or is there, panic buying? And that's something that we're going to be paying attention to in the coming days. All right, and we're going to determine that once this rally subsides. Next is going to be the NQ. And the NQ here, you can see a really nice double top. We're making that right side. So now we're going to see if this thing has any legs here. Some of the FANG stocks were doing well, but still showed a lot of weakness. Facebook was one of them. Not that Tesla is on what you so call a FANG stock, but looking really weak. And Apple, well, I didn't think Apple did so well as well. So let's keep an eye on what's going on here, and these are the areas here, more importantly, for resistance 68, 62, and then of course the high here at the 70.34. But again, we caught the lower end of the TMT proprietary price channels, and then again, right up in here, resistance. We just closed just above it, so 67.80, 675 will act as support, little support. Okay, now we have our GDX, as you know, which follows, right? GDX, excuse me, really leads the gold medal, right? GDX leads, the miners lead gold. And you could see we did have a pop-up yesterday based on the tariff, the 25% steel and aluminum tariffs, right? So the miners got some movement out of it, but it's still bearish. Okay, I like gold. I like the miners. I don't like it here, though. I like to see this move a little bit lower and break down and see where it stops. I like to see a hard flush, and usually gold does that. If you're selling, if the gold is making low lows, low highs, you eventually will get a big capitulatory flush lower, and that's when you want to buy it. Okay, I'm not looking to buy this here. If at all anything, I'd be looking to buy it anywhere a break above these two areas here. Okay, but I'm still not looking. I'm not looking to do that at the moment. I love gold for 2018 trade, but I'm not looking for it. I want to see it come in a little bit more. And you can see we started to break down on Thursday, and then Friday we popped back up again. 1249 seems to be really the key here. 1249, even 1226 or 1270 for an even leg. And you could see the momentum indicators here, RSI, MACD, are not giving me a buy signal at all. So even though we did get a pop, I'm staying away from gold and the gold miners, okay, at the moment. Next is going to be, oh, and by the way, speaking of that, let's get our commitment to trade reports out. Now, the producers with smart money in the report, right, have moved up on their shorts, right? So they've covered a little bit more from the previous week versus the last 4 weeks. But this is really telling me anything. All right, we're going back and forth. We had 4 weeks of reduction in their shorts. We had a big move lower back again, adding to shorts, and then we reduced it again. I need to see a couple more weeks. So really, the COT report isn't telling me anything that I need for a good trade. Although it's telling me that there's uncertainty, like they're not knowing what really to do as well. Well, they're always short, but it just looks like to me like when I see consecutive bars up and or down, something like this, that's something that we can trade off of. But as of right now, that this is nothing. It's telling me nothing here for crude oil. Excuse me, for gold. Now for crude oil, right? You could see that they've added to their short. So they had 4 weeks up, all right, and now, 3 weeks up, and now they started to add ever so slightly. So this as well, it's giving me a little cautionary measure in crude oil. Although energy was up, you could see that here, but we had a nice little hammer down below at the 60.16. We had the low here, and now we're inside the TMT proprietary price channel. So to alleviate any type of bearishness, we need to take out this area here, 64.24. If you feel that you think that energy is going to move higher, I think it's I really don't know what to think, honestly, because we're going back and forth here. I'd like to see a deeper flush into this zone area, 56.51, and see if it holds for a trade to get long. But I think we're in no man's land here. Again, and a lot of the oil stocks that we traded 2 weeks ago, they did really well. They had a nice little bounce. Then we're looking for that corrective bounce, and we tiptoe in and we tiptoe out because it is corrective, right? So you're going against the grain. If we were in a solid uptrend, then we'd hold it, but we're not. We're looking for trades that we can get in and out for the moment until this market decides what it wants to do. TLT, hey, you can see that here. We had really no movement as well, very choppy, and if anything, it looks like a bear flag to me that we look for lower prices. I'd like to, if rates were coming in at all, here's your bear flag. If rates are starting to come in, yeah, then for a trade, I take it to the long side up to at least the 50 and even possibly the 200-day moving average. But that's going to be a hard trade because bonds are being sold into on a regular basis, So you're gonna have some headwinds against you here in TLT. So I am a better short seller up in here at the 125, even up into the 123 with a 200-day moving average. Now the ZB, which is the future, I'd love to see this 150 print come in here, but again, we rallied off the lows. To me, this is still corrective. Yes, we do have buy signals in MACD and RSI. So how far can this go? Well, take a look at our volume profiles here. See, we got stuck right here at the 145.09. But if we can take that out on a closing basis, look at the thin zone we have all the way up to the 149.20 to the 150. Okay, that's going to be ZB. Transports, okay, really didn't do anything, didn't do much yesterday. A lot of transports are getting sold into as well. Airlines are looking pretty ugly at the moment. They're not looking so great. Some of the truckers and the rails as well. But you can see here we caught that 182.98, and we are now headed lower, right? We have bearish symmetry of lower lows and lower highs. So this did not recover. But we'll see what happens in the coming days. I'm going to pay attention to the transports, which we always do anyway. You can see our MACD did cross over, looking to cross back to the downside. RSI on a sell signal, trying to get a buy signal in here. So let's see if we can get some movement and get some continuation going into today and into tomorrow. Okay. Next is going to be the spiders. And that's that big spot right here. You can see we tagged that right there. This is something to pay attention to. 270. We really need to hold 270. And if we don't hold 270, look at the low here at 265. 265 is going to be that area that we need to hold if we start to revert back to the downside. Otherwise, we should get the flush down to the 200-day moving average at 258.88, and then we would reevaluate it. Okay, now if we do move higher, remember there's a gap area here. There's a couple of small little gaps in spiders, but there's a gap area way up in here. So this little swing high here at that 278.94, that's going to need to, at least we're going to need to take that out, and then we can start moving higher yet again and fill that gap. But I do think the gap at one point needs to get filled, and I do think we need to test the lows. That's just in general of the market. We did not test the lows. Yeah, we made a higher low here. We had that bull flag, as you can see, that actually failed. So I'm going to remove that, and I wanted to show that to you right in front of you guys. All right, so that failed, and now we have an area, we have a downward channel, and we're going to see if we continue to move higher and retrace back some of these days. We're still under the 50-day moving average, under the 21 moving average, so it's not, that's still bearish to me. I think the whole pattern is still bearish. I think we had we had 3 big distribution days here, you can see. So this is nothing bullish at all. But to trade, take a corrective rally to the upside, why not? You know, and that's something that we're going to be monitoring in the coming days. Last is going to be the Qs. Okay, off the daily chart. You can see that here as well. We bounced off that 162.80. We caught that 165.90, and now really is challenging the highs at 170.91. We'll see if that actually can happen, and I do think it can happen. We had a bigger move up. Netflix exploded higher, so we'll see if that can take place, and see if we can move higher. If technology starts to move higher as well, then I think you're going to get a decent retracement rally where we can start really legging into some good short trades. I have a whole list of stocks to short once and when this retracement rally completes. Now, again, it's only one day. Friday was one day. We need some follow-through today and possibly even on Tuesday. Okay? And diamonds, you can see diamonds were the weaker of the bunch. You can see that here. That's going to need to hold. This low is, I think, going to be tested at some point. The 140.14, it will act as resistance. That's going to be Friday's high. Keep an eye on that. And then also the lower end of the TMT proprietary price channels are 248.69 all the way up to 252.68. And that's going to be your diamonds trade. Next is going to be the IWM. Now the IWM did actually well. It actually had a big long-legged doji. On Thursday, we took that right back, and now we closed much higher with the Russell 2000 moving in favor. Now we have resistance here that's going to come in at the 155.40. Keep an eye on that, and of course Friday's low of 148.15, 148.22. Pay attention to that for those of you who are trading the IWM. And then let's take a look at our intraday. Okay, here's that bull flag that we broke out of, right? That didn't really materialize. Actually, did materialize. We had a nice 2-day move in it. These are your areas for today's trade. Pay attention. 2650 is going to be really, really big, guys. 2650 is going to be extreme. All right, we have to watch that. 27, 27.19, 27.56. Those are for today's trade. And then down here, 26.70, very light volume, but 26.50, 26.40, and 26.29. Those are your two bigger areas for pullbacks into that value area. Okay, in the ES. NQ. Okay, we had a downtrend channel, as you can see. We alleviated the bearish symmetry of lower lows and lower highs. So for a trade, sure, why not? 67.65, 67.35, 68.66. That's resistance. Those are your resistance areas and your support. Write them down on your trading charts for today's trade. Okay, gold. Gold also alleviated downside pressure of bearish symmetry of lower lows and lower highs. It's outside of its channel, but I think that's temporary. I think now, again, if we have something really crazy happening geopolitically, then yes, and I think that we can explode much higher. And 1400 is going to be key to take out. If you take 1400 out, I think you'll see 1700 really quick. But these are your levels for today's trade. Okay, 1294. And then down here to 1280. These are the areas. Way down here is something that I'm looking to be a better buyer than I am here. I'm looking to buy. Okay, but these are your resistance areas as well for today's trade. These two, 1322 to 1335. Crude oil, again, also outside of its downward channel. And I like to see if what's going to be really important. We've had a mixed number. 2 weeks ago, we had a huge draw versus a build that they were looking for, all right, in the API number and the DOE number on Wednesday. Last week, we had the opposite. We had a huge build. So what is it, right? Well, we're coming in. We're going to be starting to come into driving season. Crude oil seasonality trends are favorable to the upside. So we just need to see what's going on here. Now this week we're going to pay attention tomorrow to the API number and then again on Wednesday and see if we get some clues here. But the COT report really hasn't showed us much here. And then last is going to be your 10 minutes Qs, and you can see that here, 163.08, 160, and that's going to be really important here, all right, for your Qs. Now we took out this downside, this lower lows and lower highs, right? We had two channels, two trend lines we took out. So let's see if we can get higher prices to the 163.08 or back down here into these areas, into these value areas, okay? All right, guys, be careful out there. It's going to be very quick and fast trading, but that's where the volatility picks up, and that's where we're going to make some big money here. You guys are doing really well. I've had numerous emails from all of you, and that's great. Keep the emails coming. Remember, guys, we also have our one-on-one private coaching program that we use, that we're implementing. One-on-one coaching. You sign up and you cancel anytime. When you feel like you don't need it anymore, it's gone. And when you need it again, you call us back. And we provide some phenomenal coaching. We set you up, show you how to run your stock trading business, because that's really what you guys are doing, all right, as well as our research videos. So have a great day, and we'll see you tomorrow. Take care.